Hey everyone, welcome back to FinSphere Global. What I am about to share with you today is probably the most significant supply-side development in the silver market in over 50 years. I've been doing this for a while now. I've covered price movements, I've covered manipulation allegations, I've covered demand surges and inventory drawdowns. But what's happening right now in Mexico is different. This isn't a temporary disruption. This isn't a labor strike that gets resolved in 3 weeks. This isn't a weather event that delays shipments. This is permanent. And if you hold silver, if you're thinking about buying silver, if you have any exposure to precious metals whatsoever, you need to understand what just happened and what it means for the next decade of this market. Let me give you the headline first, and then I'm going to break down every single detail. The Mexican government has initiated what can only be described as a nationalization wave, targeting foreign-owned silver mining operations. 5 major mines have been ordered to cease operations immediately. Export licenses have been revoked. Assets have been frozen. And the companies involved have been given a choice: accept government buyout terms at a fraction of market value, or face complete expropriation without compensation. The combined output of these 5 mines represents approximately 22% of global silver production. Let me say that again, because I need you to understand the magnitude of what we're discussing. 22% of all the silver produced on planet Earth every single year just got switched off. Not reduced, not disrupted, switched off. Now, before I go any further, I need to tell you something important. I'm going to walk you through these 5 mines individually. I'm going to explain the political background. I'm going to show you the timeline of how this unfolded. And I'm going to give you my honest analysis of what this means for silver prices. But I am not your financial advisor. Nothing I say in this video constitutes investment advice. I'm providing you with information, research, and context so you can make your own informed decisions. That's what we do here at FinSphere Global. We give you the truth. What you do with it is up to you. Now, let's start with some context, because this didn't happen overnight. Mexico has been the world's largest silver producer for over a century. In 2024, Mexican mines produced approximately 196 million ounces of silver, representing roughly 24% of global output. The country's geological endowment is extraordinary. The Sierra Madre mountain range contains some of the richest silver deposits ever discovered. For decades, foreign mining companies have operated in Mexico under a relatively stable legal framework. They paid royalties, they employed local workers, they invested in infrastructure. And, in return, they were allowed to extract and export the silver they produced. That arrangement is now over. The current administration has been signaling a shift toward resource nationalism for several years. Environmental regulations have tightened. Royalty rates have increased. New mining concessions have been frozen. But what happened last week crossed a line that nobody expected. The Ministry of Economy issued emergency decrees targeting 5 specific mining operations. The justification cited was a combination of environmental violations, failure to meet community benefit requirements, and national security concerns related to strategic mineral resources. Let me be very clear about something. These justifications are pretexts. Every independent analysis I have reviewed suggests that the environmental and community benefit claims are either exaggerated or fabricated entirely. What's really happening is straightforward resource seizure dressed up in legal language. Now, let me walk you through the 5 mines that have been shut down. Mine number 1. Fresnillo's Saucito operation. Saucito is one of the largest primary silver mines in the world, located in Zacatecas state. This operation produced approximately 18.6 million ounces of silver in 2024. That's about 2.3% of global production from a single mine. Fresnillo plc, the operator, is a London-listed company that has been mining in Mexico for over a century. They employ over 4,000 workers at Saucito alone. They've invested billions of dollars in infrastructure, processing facilities, and exploration. 15.8 million ounces of annual production. Gone. Mine number 5. Endeavour Silver's Guanaceví operation. Guanaceví has been operating in Durango state for over 15 years. Endeavour Silver, a Canadian mid-tier producer, has built this into a reliable, consistent operation, producing approximately 5.3 million ounces of silver annually. Guanaceví isn't the largest mine on this list, but it's important for a different reason. Endeavour Silver has been one of the most community-focused mining companies operating in Mexico. They've built housing, schools, medical facilities. They've implemented profit-sharing programs with local communities. They've been held up as an example of responsible mining. None of that mattered. The government decree targeting Guanaceví claims the company has failed to meet employment localization requirements and has discriminated against Mexican nationals in management positions. Here's the reality. Endeavour's Guanaceví operation is 94% staffed by Mexican nationals. The management team includes multiple Mexican citizens in senior roles. The company's community development programs have been recognized by international NGOs as best in class. The allegations are absurd, but absurdity is no defense against a government determined to seize assets. 5.3 million ounces of annual production. Gone. Now, let me add up these numbers for you because the total is staggering. Saucito, 18.6 million ounces. San Dimas, 12.4 million ounces. La Colorada, 8.2 million ounces. Juanicipio, 15.8 million ounces. Guanacevi, 5.3 million ounces. Total, 60.3 million ounces of annual silver production. Global silver production in 2024 was approximately 820 million ounces. These 5 mines represent 7.4% of global production just by themselves. But here's where the 22% figure comes from. The nationalization decrees didn't just target these 5 mines, they included provisions that effectively freeze all foreign-owned silver mining operations in Mexico, pending a comprehensive review of concession agreements. That review could take months, it could take years. And during that time, no foreign-owned mine in Mexico can legally export silver. When you include all the operations affected by this freeze, the total impact reaches approximately 180 million ounces of annual production. That's 22% of global supply. Now, I want to address something you might be thinking. Maybe these companies will negotiate. Maybe they'll accept buyout terms. Maybe operations will resume under Mexican ownership. Here's the problem with that thinking. Mining is not like running a retail store. You can't just hand over the keys and expect production to continue. These operations require specialized technical expertise, ongoing capital investment, complex supply chains for equipment and consumables, and experienced management teams. When you nationalize a mine, you don't just change the name on the ownership documents, you disrupt everything. Let me give you a historical example. In 2006, Bolivia nationalized its natural gas industry. Production dropped by 35% over the following 3 years, even with massive government investment. The expertise left, the efficiency collapsed. The output never recovered to pre-nationalization levels. Venezuela nationalized its oil industry and went from producing 3.5 million barrels per day to less than 700,000 barrels per day. That's an 80% decline. Resource nationalization destroys production. It doesn't transfer it, it destroys it. So when I say 22% of global silver supply has been cut forever, I'm not being dramatic. I'm being realistic based on historical precedent. Now, let's talk about what this means for silver prices. The silver market was already tight before this happened. Investment demand has been surging. Industrial demand for solar panels, electronics, and electric vehicles has been setting records. Above-ground inventories have been declining for years. The supply-demand balance was already precarious, and now 22% of supply has been removed from the equation. The government decree claims that Saucito has failed to remediate historical tailings contamination and has not adequately compensated indigenous communities affected by mining activities. Here's what the decree doesn't mention. Fresnillo has spent over $200 million on environmental remediation at Saucito over the past decade. They've built schools, hospitals, and water treatment facilities for surrounding communities. Independent environmental audits have consistently rated the operation as meeting or exceeding regulatory requirements. The real reason for targeting Saucito is simple. It's profitable, it's productive, and the government wants it. Operations ceased on Tuesday. The export license was revoked on Wednesday. Asset freeze orders were issued on Thursday. By Friday, Mexican federal police had established a perimeter around the facility. 18.6 million ounces of annual silver production. Gone. Mine number 2, First Majestic's San Dimas operation. San Dimas is legendary in mining circles. This operation has been producing silver continuously for over 100 years. Located in Durango State, San Dimas produced approximately 12.4 million ounces of silver in 2024, along with significant gold byproduct. First Majestic Silver Corp is a Canadian company that has become one of the largest primary silver producers in the world. Their CEO has been vocal for years about silver market manipulation, COMEX delivery issues, and the need for higher silver prices to sustain mining operations. That vocal criticism may have made First Majestic a target. The government decree targeting San Dimas cites alleged violations of water usage permits and failure to obtain proper community consultation for expansion activities. Here's what I know from sources close to the operation. First Majestic's water permits were renewed just 8 months ago after a comprehensive review process. Community consultation records show over 200 meetings with local stakeholders over the past 5 years. The allegations don't withstand scrutiny. But that doesn't matter when the government controls the legal system. First Majestic's share price dropped 47% in a single trading session after the decree was announced. The company has announced plans to pursue international arbitration, but the process takes years. The silver production is lost now, 12.4 million ounces of annual production. Gone. Mine number 3, Pan American Silver's La Colorada operation. La Colorada has been operating in Zacatecas State since the 1970s. Pan American Silver, another Canadian company, acquired the operation and has invested heavily in modernizing the processing facilities. In 2024, La Colorada produced approximately 8.2 million ounces of silver. The operation employs over 2,500 workers directly and supports thousands more in the surrounding community. The government decree targeting La Colorada is perhaps the most egregious of the five. The stated justification is that Pan American failed to report the discovery of a pre-Columbian archaeological site during recent exploration activities. The decree claims the company deliberately concealed the discovery to avoid delays in permitting. Here's the truth. Pan American did discover archaeological artifacts during exploration drilling last year. They immediately reported the discovery to the National Institute of Anthropology and History. They suspended drilling in the affected area. They funded an archaeological survey. They did everything right. The government is now using their own compliance as grounds for shutdown. This is what happens when rule of law breaks down. When the government decides to take something, they will find a justification. And if they can't find one, they will invent one. 8.2 million ounces of annual production. Gone. Mine number 4, Mag Silver's Juanicipio joint venture. Juanicipio is a newer operation, a joint venture between Mag Silver and Fresnillo. Located in Zacatecas State, this mine began commercial production in 2023 and quickly ramped up to become one of the highest grade silver operations in the world. In its first full year of operation, Juanicipio produced approximately 15.8 million ounces of silver. The ore grades at this deposit are extraordinary, averaging over 500 grams per ton in some areas. For context, most silver mines operate at grades below 200 grams per ton. Juanicipio is supposed to be the future of Mexican silver mining. Billions of dollars invested, state-of-the-art technology, decades of production ahead. The government decree targeting Juanicipio claims that the original concession agreements were improperly granted under a previous administration and are therefore void. This is pure legal fiction. Concession agreements in Mexico are contracts. They cannot be retroactively invalidated because the government has changed. But again, legal niceties don't matter when the government controls enforcement. Mag Silver's share price collapsed 62% following the announcement. Fresnillo, already reeling from the Saucito shutdown, saw additional losses. Here's some basic math. Global silver demand in 2024 was approximately 1.2 billion ounces. Global supply, including mine production and recycling, was approximately 1.0 billion ounces. The market was already in a 200 million ounce deficit. Now remove 180 million ounces of mine supply. The deficit doesn't just double, it becomes catastrophic. At current consumption rates, above-ground silver inventories will be exhausted within 18 to 24 months. And there's no way to replace Mexican production. You can't build a new silver mine in 18 months. The permitting alone takes 5 to 7 years in most jurisdictions. This is a structural supply crisis with no near-term solution. Now, I want to be careful here because I know how this sounds. It sounds like I'm trying to hype you into buying silver. That's not what I'm doing. What I'm doing is presenting you with facts. Mexico just nationalized 22% of global silver production. Historical precedent suggests that production will not recover under government ownership. The market was already in deficit before this happened. Inventories are finite. These are facts. What you do with them is your decision. But let me tell you what I'm doing with my own analysis. I'm revising every price target I've previously published. The models I use are based on supply-demand dynamics. When you remove 22% of supply, those models produce very different outputs. I'm not going to give you a specific price target in this video because the situation is still developing. But I will tell you this. The previous ceiling I had in mind for silver is no longer the ceiling. It's potentially the floor. Now, let me talk about the broader implications because this isn't just about silver. What's happening in Mexico is part of a global trend toward resource nationalism. Governments around the world are looking at their mineral resources and asking why foreign companies should be allowed to extract and export them. Chile has announced plans to nationalize its lithium industry. Indonesia has restricted nickel exports. The Democratic Republic of Congo has been renegotiating cobalt mining contracts. Argentina is reviewing its lithium concession framework. The era of easy access to cheap resources is ending. For decades, the global economy was built on the assumption that capital could flow freely to wherever resources existed, extract those resources efficiently, and supply global markets at competitive prices. That assumption is no longer valid. Governments are asserting control over strategic resources. And silver, with its critical role in solar energy, electronics, medical applications, and military technology, is absolutely a strategic resource. The Mexico nationalization is not an isolated event. It's the beginning of a trend. And that trend has profound implications for anyone who needs silver, anyone who produces products containing silver, and anyone who invests in silver. Now, let me address the response from the mining industry and financial markets. The Mining Association of Canada has issued a statement condemning the nationalizations and calling for international arbitration. The London Bullion Market Association has expressed concern about supply continuity. Several major banks have revised their silver price forecasts upward. But here's what matters more than statements. Insurance rates for mining operations in Latin America have doubled in the past week. Exploration budgets for Mexican projects have been frozen across the industry. Companies with Mexican exposure have seen credit facilities pulled or renegotiated. Capital is fleeing Mexico, and capital is what makes mines operate. Every mining executive I've spoken with this week has said the same thing. Mexico is finished as a destination for mining investment. Nobody's going to put billions of dollars into developing a mine in a country that just seized operating assets without compensation. That means even if the current nationalizations are somehow reversed, the damage to investor confidence is permanent. Mexico will not attract new mining investment for a generation. And remember, Mexico has the richest undeveloped silver deposits in the world. Those deposits will now remain undeveloped. Future supply that might have come online in 5 or 10 years will not materialize. The supply impact isn't just 22% today, it's 22% plus whatever growth was expected from New Mexican projects. The cumulative impact over the next decade is almost incalculable. Now, I want to speak directly to those of you who have been following my analysis for a while. You've heard me talk about supply constraints before. You've heard me talk about inventory drawdowns. You've heard me say that the physical market was tightening. This is what I was warning about. I didn't know it would be Mexico nationalization. I didn't know it would happen this way. But I knew that something would break the supply chain because the numbers didn't add up. Demand was exceeding supply. Inventories were declining. Prices were not reflecting reality. Something had to give, and now it has. If you positioned yourself based on the analysis we've been doing here at FinSphere Global, you're ahead of this move. If you haven't positioned yourself yet, you need to seriously consider your options. And I want to be clear about what positioning means. It doesn't mean panic buying. It doesn't mean leveraging yourself to the maximum. It doesn't mean listening to anyone who tells you to mortgage your house. Positioning means understanding the landscape, assessing your own financial situation, and making deliberate, informed decisions about your portfolio allocation. That's what we help you do here. We don't make decisions for you. We give you the information to make better decisions for yourself. Now, let me tell you what we're watching next. The Mexican government has scheduled a press conference for later this week. We expect official confirmation of the nationalization program and potentially additional details about the scope and timeline. The affected companies have until the end of the month to respond to the buyout offers. If they reject those offers, we expect expropriation proceedings to begin immediately. International arbitration claims will likely be filed under NAFTA successor agreements, but those proceedings take 3 to 5 years minimum. They offer no near-term relief. The silver market will price in this supply shock over the coming days and weeks. We've already seen significant movement, but I don't believe the market has fully absorbed the magnitude of what's happened. I'll be covering all of it here on FinSphere Global. Every development, every implication, every opportunity, and every risk. Now, here's what I'm asking from you. If this analysis was valuable to you, if it gave you information you haven't seen elsewhere, if it helped you understand what's happening and why it matters, subscribe to this channel. I'm not asking for my benefit. I'm asking for yours. When the next development happens, and it will happen, I want you to hear it from me first. I want you to have context before you see the headline. I want you to understand the implications before the mainstream media tells you what to think. That's what subscription gets you. It gets you ahead of the curve. And if you're already subscribed, I need something else from you. Drop a comment below. Tell me how you're thinking about this situation. Tell me what questions you have. Tell me what you're seeing in your local market. Are dealers running out of silver? Are premiums spiking? Are you seeing unusual demand at coin shops or online retailers? That ground level intelligence matters. It helps me understand what's really happening beyond the institutional data. And it helps everyone in this community make better decisions. Now, let me leave you with something to think about. 20 years ago, silver traded around $5 an ounce. People said it was a dead asset, a relic, something your grandfather collected. 10 years ago, silver was trading around $15. People said the run was over, the peak had passed. Today, we're watching 22% of global supply get switched off permanently. Markets don't move in straight lines. They move in response to structural changes in supply and demand. And what happened in Mexico this week is the most significant structural change in the silver market in half a century. I don't know exactly where silver prices go from here. Nobody does. Markets are unpredictable in the short term. But I know this. The supply that was lost this week is not coming back. The deficit that existed before just got much worse. And the investors and institutions who understand this reality are positioning themselves accordingly. The question is whether you're going to be one of them. This is FinSphere Global. Real analysis, real context, no hype. Subscribe, turn on notifications, and I'll see you in the next update.